Hello and welcome to the trade. Before we get to the charts, let's take a look at what traders are watching. And President Trump is set to address Israeli parliament amid fragile ceasefire in Gaza, where he's expected to receive a hero's welcome after he brokered that deal with the pending release of Israeli hostages and Palestinian prisoners. Meanwhile, China has blamed the US for raising trade tensions. China calling President Trump's latest tariffs on Chinese goods hypocritical and defended his curbs on exports of rare earth elements and equipment, but stopped short of imposing new levies on US products. Oil prices have rebounded after sharp losses on those US-China tensions, with markets falling precipitously on Friday. Oil prices clawing back some of the gains on Monday after hitting 5-month lows. Well, let's get to the charts now. Gary Glover is joining us from Novus Capital. Gary, welcome back. Good to see you again as we get across those charts. Let's start stateside. And of course, we did see those heavy falls on Friday as that trade spat between China and the US suddenly gathered pace again. What are you seeing on the chart? Because we did see, as I mentioned, some very sharp falls there, particularly with the S&P and the Nasdaq, but investors have been wary of a potential pullback, haven't they?
Are they? I don't know. I feel like there's a little bit of a complacency there at the moment, Andrew. So, yeah, I mean, it's quite interesting. If we go back and study all the big tops historically, we get a lot of the same things here. We get extreme valuations, we get that complacency. I think AI has probably led to some of that. And we tend to move through the gears. So what I mean by that is that the bull market will sort of start with the big caps, and they'll sort of move down mid caps, and then at the very end of the bull phase, usually is small caps. So that's when they're the hottest. So we've definitely moved through all the gears. A couple of things I saw last week I thought were quite alarming were when we look back historically at the tops, we see market breadth sort of deteriorating. So in July,
well,
yep.
Sorry about that, Gary. It looks as though we've got a technical issue there. We're just trying to get your charts up. Well, let's see if we can.
That's all right.
Yeah, bear with us. Okay, keep going.
But with deterioration, so we've seen in July the actual market. I think 80% of the S&P 500 trading above the 50-day moving average. As of last week, that had declined to only about 55% of stocks trading above the 50-day moving average. So, 45% of the market's already broken down here and actually showing weakness, and that was before Friday night session. So it's probably sort of sitting at. The other thing we tend to get at all market tops is we get the leaders doing the heavy lifting at the end. So this, if you look at not the Mag 7, but the Mo 7, which is the Momentum 7, which is a lot of the AI stocks like Palantir, Nvidia, ARM, they're about 20% away from their moving average at the moment, Andrew, which is, so they are sort of, hanging on while the rest of the market actually is deteriorating. That's the classic signs of sort of what you normally sort of see at tops. From a technical perspective, if you break it down here, we see squaring of ranges and we see certain sort of timings that sort of run into tops as well. So normally, if we go back and look at most of the tops historically, they'll tend to run in either like a quarter year or a half year cycle from the previous high or low. And we've gone exactly sort of half year straight up here from early April up into early October there. So just got a lot of signs here of that, if we look at all the major tops in the past, we've got every box ticked here at the moment. All the same categories are sort of coming across here. What we normally sort of see before we turn down is what we call distribution days. So we see the market down more than say 0.2%, and we see heavier volume. Normally you get a cluster of say 4 to 5 days over a couple of weeks. And that's kind of it's one of the last things we see before the market tends to roll off here. So the S&P's had only 3, but the Nasdaq and the Dow have actually had 4 distribution days here in the last week or two here. So we've got a lot of signs here that we potentially could be at an important high here, an important peak, and all the red light signals that we see historically from some of the big highs, some of the major tops and stuff are sort of shining here as well. So this last move here on the Nasdaq has sort of expanded 150% of this April range, and also expanded to the O2 sort of bear market as well, which was for the Nasdaq. It was the tech boom was the last sort of big correction. So we squared out some ranges from that. The S&P sort of last big decline was the GFC. We're squaring out ranges from that as well. So just got a lot of signs here to be very cautious here right now with the valuations there. And if I say we've got if we go back and study those previous highs, we've got every box ticked here at the moment in alignment. So I'd just suggest to investors and traders here to be pretty cautious here in this current market.
Gary, let's just have a look at the local market. Now, bear with us, we are having some technical difficulties with our charts, so we'll see if we can get that up. But what are you seeing with the ASX 200?
Yeah, I mean, the XJO sort of, it sort of, after it broke to a new high, it sort of expanded about 25% of that range, which is sort of something that's normally what happens for most extensions there. The Nasdaq's gone to 150%. The S&P's sort of gone, again, 150% of that previous range. So they've really gone a lot higher than they normally would. And we've gone up for 6 months there. If you look at that 6 month phase there, there's only, I think the S&P's only had like 4 days down, and then maybe a couple of 2 days and cluster. So we haven't had many down days throughout that 6 months. So there is a level of complacency there in the market. Already we've had a good bounce here today, the futures after it, but I'm just not sure. I feel like the market, is the market sort of needing a reason to sell off here, or is the market just sort of, was it ready to be sold off? So I just think there's some concerns there. I think the XJO, the big question here is the market going to come back and sit on top of the previous high, which is sort of what most of them would do. Normally when you break out, you go for a bit of a run, you might go to quarter extension, and then you'll peel back and come back and retest the high, and then maybe you'll come back from there. So that's kind of suggesting here that we'll peel back to that old high there in early 2026. So it's not a big fall here, but it's a reasonable one. But that S&P and the Nasdaq, there's some signs there that we could see a bigger sell-off there. So we can't bank on that. And the Christmas rally, which everyone was probably counting on this year, it hasn't. It's actually sort of failed to deliver in quite a few of the previous years here. So I don't think we can rely on that either.
Now, Gary, we're just running out of short time, so let's get to some stock specifics. And ANZ is the next chart there. Of course, it's had its strategy day to day. It has bucked the broader trend we're seeing on the market. It's up some 2%. What's the chart telling you?
Yeah, it looks just pretty extended here again, like another one there, like I think NAB and ANZ are sort of, there's just a few nice sort of squarings there from the previous lows and highs and stuff there, but really we've had this sort of classic sort of fourth wave, congestion, and then we're in this sort of final leg here. So just got a few signs there that we're in the last legs of this bullish phase here for those banks. I mean, excess valuations there, you've got them across the board here. I mean, if you look at what Wesfarmers, CBA, Telstra, I mean, those sort of stocks that, don't really have a strong growth earnings profile ahead here. Most of them are trading on 30 times here recently. Most of the banks are probably trading on multiples about 50 to 60% above their historical sort of averages. So, NAB and ANZ, Westpac and that. So there's just some pretty big valuations there. So there's definitely some room for this market to come back here.
And Gary, finally, let's take a look at a gold stock. Now, I think last time you were on, we might have been looking at Northern Star. You were just warning perhaps there was some signs. Was looking a little exhausted. But of course, we've had the gold price hit yet another record, clearly off the back of what we've heard from for Donald Trump. So investors seeking the safe haven again. What are you seeing with Evolution?
Yeah, one of my mentors there, Bill McLaren, he used to talk about these vertical trends, or what he called blow-off trends. And then it's on a weekly chart. If you saw 3 extending trend lines, we're sort of like building a base, and then the next one accelerates, the next one. Basically, this trend is sort of winding up here. So once you start to get to the 4th or 5th accelerating trend line, you're in the late stages of this sort of vertical move here. So really, if you look at that move on evolution there, we've had a really strong move out of that $7 there from around that July sort of period here. So that is a fifth accelerating trend line. So it might be able to go a little bit higher here, but once we break that trend line, historically, once you break below these accelerating trend lines, you're typically going to come back to at least where the last trend line started, and oftentimes you'll come back to the third accelerating trend line. So that's sort of suggesting here that once the trend line gets broken here, evolution could come back towards $7 there, and potentially, ultimately it might even come back near $5 there. So I know people will find that probably a little bit crazy there, but these vertical trends, if you sort of study them historically, I'm yet to find one that hasn't come back to that, to the last acceleration point here. So it hasn't broken here yet, so still hanging on. But if it does break below here, just going to be pretty cautious there. So if you're long a few golds here, just make sure you keep those stops sort of nice and tight here, because if it does start to break down here, I think you'll see a fairly larger decline. And the thing about gold too, Andrew, I've learned this the hard way in the past, is sometimes the gold price can actually hang around, but if the market does start to break down, the gold stocks will tend to follow the market more so than the gold price, so they can peel back here. So I'd just be a little cautious. I'll make sure I have all my stops on my gold prices at the moment.
Gary, you managed to talk us through those technical difficulties. We can't quite see you at the moment, but thanks so much for joining us in Novus Capital.
Thanks, Andrew. Have a good day.